All right, Sam back with you here Tuesday, February 13th, mid-morning. The second coin that was requested via the voting tally that we do every day amongst the members was Enigma to Bitcoin. Now, I've done this coin not too long ago, so my guess is the reason members want to take a look at this is either they're new and they haven't seen this video before, or they're trying to get a handle on where we are, where we could be going. So I'm just quickly, since this is a video I've done within the last couple of weeks, I'm just going to do a quick review here of some of the things that I think are significant. This is a great example of the combination of working with an Elliott wave approach for structure and pattern with the algo polls, right? So knowing how they approach the market. And again, I'm not saying this is the only algorithm in the market. I'm saying that there's a group of traders that have written algorithms that will do this in a very predictable way, and we can identify that when we see it, and we can try and trade in behind them. And as I've often said in video, we're trying to use the Elliott wave to get in behind them, to reduce the risk and the exposure. So we're using those price patterns, those recurring price patterns that we know are dominant in the market. Not always, but when they are there, they give you a roadmap, a potential roadmap of where the market is likely to go. And then you can use the probabilities to your advantage. So looking here now, so we're just to do a quick review here. Now, the Enigma is just an amazingly strong project. This has only been 4 months on the market here. We have a market cap of 226 million, but look at this scoring here. 61 on the CoinGecko metric scale, and then strong interest here amongst developers. They're hot for this, so that would tell you that this is a very strong project. That's very encouraging with a coin that's only been on the market for 4 months. Now this market cap, right? You know, I've seen some be in the market 4 or 5 months with market cap in the billions. So it's a grower, but this would tell you this is just the kind of coin that you want to look at, in that it hasn't exploded yet, so that all that upside is there for market cap to increase, yet you have these very strong metrics here to show you that the strength of the project. So the request today was to look at it on Bittrex. So here's Enigma to Bitcoin. This is the 4-hour chart where I can just show you some things that are. These are kind of things that if you haven't seen them before, it's a little bit of a mind blower, right? So it's So clearly you can see the Elliott wave pattern here. So we can see. So I'm just working from the swing low. Here's the ICO insanity. Then we get a hard low. Right, so we can see we get this very clean 5-wave pattern, and there's a few tells here that we can see along the way. So we get the 1, 2. Here's the 3. 4 comes down. Does not overlap the 1. I promise you that is not random. Right. So if we look at this, so were you trading that? And again, I'm not trying to glorify analysis of prior swing movement. It's just to make this point. So take a look here. So what we're trying to do is say, okay, is it technical? Are the algorithms in? Well, how are we going to know that? Well, so first we got to check some of these pivots. So from an Elliott perspective, we're always going to, if we're looking for the 4, we're always going to take the length of the 3, assuming we don't get an overlap here, right? And we're looking for the 4th. So all I'm going to do is just go up to my 3 high. Okay, so here's the 4th here. So we know that, now this is deep for a 4. 4 is more typically between the 38 and the 50, but we get these wicks down here. It's a challenge of the 1. It's able to hold, but look where we go. All right, I mean, to the tick. So, again, I promise you that's not random, right? So this is an algorithm that's written to buy the 50, defend all the way to, they flip on the other side, they defend all the way to the 65. So here's the front run. They start buying at the 50. They continue to buy. They'll defend it all the way to the 618. Just, so again, coincidentally, here's the wave 1 high. So you could think of it as, this Elliott wave. I don't buy any of that BS. You say, fine. If you don't, that's fine. I'm telling you, you don't need it, but it can be very useful if you incorporate it into what you're doing. So you say, I don't Elliott wave bullshit. Prior resistance becoming support. Because if you just want to think of it that way, if you're old school or whatever, don't want to put the energy and the effort and the time into learning Elliott wave, you don't need it. There's your wave 1. Here's your pivot. Here's your retracement. Okay, so this is an internal retracement. I get a swing here. So you can think of it that way. I've just got a swing low to swing high. I'm just looking for, pretty common. There's not a trading package anywhere on the planet that's not going to give you a 38.50 and a 618. So you can say, okay, well, I just a retracement. But here's the tell that the algos are in. right? That if you didn't know to look for that, you just wouldn't know where the target was. So this is, again, this is not how you know the algorithms are in. The fact that there's support at a 50% retracement or a 618. This is how you know. It's the target. It's what's the reaction at their target. Now, I don't know how I can give you any more clear evidence than that. I just don't, because not only do we stop here, look at the reaction. Sell, 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 sell. Boom. And where do we go, right? So right back to where we started, right? So this is that's why they make so much money. Right? If you don't know that it's there, you're up here going, go, 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 Enigma, go, go. Boom. And if you didn't know to look for it, to either tighten your stop or, you're just, all you're seeing is just blue sky. Oh, it's going to keep going. You got to know that that's there. You just have to know it. So, all right, so enough on that. So if we just make the assumption that we've got, okay, right, I've got a completed 5-wave structure, whether you're an Elliott trader or not. Well, all you're going to do now, let me just take this off. So we'll go. So if we had this completed here, so an Elliott trader looks at that, you can't not see the 5 waves. I don't know how anyone looks at that and goes, well, there might be an Elliott wave there, but we can see a completed 5 wave and we get a top. So let's go from the absolute low here, as we would with any Elliott wave. All right, we're just going to go here. Now, what happens next? Okay, so we complete the 5-wave structure. We come down, right? We know that markets correct in 3s, they trend in 5s. Okay, so we've got a trend established here by this 5. Then we get a 3-wave that's correcting it. So here's the A wave, here's the B wave. Where's the C wave go? All right? What did I just tell you? Okay, our algo's in. They defend it. They start buying at the 50. They start buying at the 50. They defend it all the way to the other side of the 65. Look at the 65 hold to the tick. Again, I promise you, it's not random. So that where's that target? Right? So the algorithms that are written to buy that, right here, here's their target. Okay, so all of my members know that. So they're looking at that going, well, okay, wait a minute though. If that's the target, how does that fit in with my Elliott wave? Because I can clearly see I've got a 5-wave impulsive move here, and I get a nice clean 3-wave technical correction of that, right? So you could think of it this way. So here's a swing. This is an internal correction. It stays internal to this swing, low to high. We stay internal, and we get a technical pivot. Right. In today's trading, you got to pay attention to the algorithms. You're just going to get eaten alive. You just have to know where they are and what they're likely to be doing. So here's the pivot. So first thought is, okay, well, so where's this going? Does that mean it's going here's this? So if I'm new to all this and I'm thinking Elliott wave, well does that mean that this is my third because that's the algo target? Not necessarily, right? So this is where we start combining the two. So we know from looking at gobs of statistical data, right? Computers can do it with far faster than we can. And these are studies, and this is data that's readily available on the web. Do a search for it on Google. It's abundantly available. All right, so we know that the highest probability zone for a third wave, right, in an Elliott wave context, is the 1618 to the 175 window. Statistically, that if you're going to get a third wave, that's where they tend to go. So if I pull this here, now as I've shown you many times, the negative 100 from the fib pull as an algo target, that's why that's an extreme for an algo target. You see how these line up? So here's the first one. So this box here, I can draw it. Well, we'll draw it right here. So this box here is the high probability zone for a third if we're going to get a third, if we're going to get it. Now, we don't know that we're going to get a third wave. We don't know that. But it's set up to go there. It could go there based on this pattern. That has been a move and a target and a projected level through millions and millions and millions of Elliott waves. Right? So that's how we come to that target. And then you can say, well, wait a minute, but you tell me that algorithms aren't using Elliott wave. Well, that's right. That's why I'm looking at, here's what the algo targets are written to do. Here's the negative 23. That's the first target. Here's the negative 618, second target. Negative 100, third target. But oh, how nice that lines up so well with the Elliott wave projections. So here's the first one, right? It's not right on top of it. But here's the first box. So here's the first algo target, right here, the negative 23. Here's the 100. Why does the 100 matter? Because if it's going to be a third wave, it's got to at least get further than the length of the one wave. Right? We don't have a fifth to compare it to yet. So all we can do is compare it to the one. Could it be a third wave? Well, it's got to get past 100%, the length of the one, to be a contender for a third. But again, that doesn't mean that we're just going to go straight. Right? So likely there'll be subdivision along the way, just as there was in here. Right? Trends in 5s, corrects in 3s. So if we're going up here, very high probability that we're going to see that subdivide into an impulsive structure. If it's going to stay as an Elliott wave third, it's got to stay impulsive. Right? We can't get a diagonal in here if this is going to play as a third. So that gives us a target, a series of targets along the way. Right? Only potential. But it's a potential roadmap. So we can look at that and go, okay, all right, if that's my target, well, man, I got pretty good pivots I can work with here. So I can look here. Well, now I've got a modified version on this. Let's go to the original. Here we go. Okay, there's the original. Okay, so we can look at this and go, okay, well, it's pretty steep. You know, if I'm using my absolute low here, let's go look at that and make sure we've got the right pivot. So let's get. Yeah, that is the absolute low right there. And this is dialed in. You know, it's worth going to get these right on the money. So this doesn't matter because we're just pulling from that level. We don't have to go over to the left to get it. That's why I wick off those lows. So we can look here and say, well, that's pretty damn steep. Right? If we're going up to that third, you know, of course, let's get the fifth in the right place here. So if we're going up to that third, you know, maybe it takes a little while to get there. I mean, that's a pretty monster move. So what is that? If I just line that up visually, so that's March 21st. If I line that up based on where we are right now, is that possible? Well, sure. No reason it wouldn't be. All right, considering that we're sitting here, what is this? So that's February 6th. That we might take, you know, a month to get there. You know, a month and a half. You know, there's your roadmap, right? So all of this moves over. So once you draw those, then you don't have to keep all of this on your chart. You know these are significant levels. That's why I do that. So here we go. So first thing we got to do now. So what do we have here? We have a golden corner pocket, right? Right. I mean, they don't get any better than that. It's my absolute #1 favorite trade. If you did nothing else in the market but trade golden corner pockets, you could retire a very successful trader. Okay, so there we get a golden corner pocket. Why does that matter? Why is that the favorite trade? Because it's got an 80% probability of getting to that median line. 80%. Andrews observed from all of his study. If these pivots hold, now, if this gets taken out, you know, that 80% is off. But right now, I've got 80% odds, right? So, but 20% of the time it's not going to get there, right? So let's be clear about that. But where else in the market do you get 80% odds? Nowhere. Nowhere. Right now, I got 80% odds. So look what I've got here lined up. So I've got, just from the Andrews median line, I've got an 80% probability. Now, it doesn't mean it gets there right in sync with the algo target. We might get there here. And then you say, well, wait a minute. Well, what if it does it there? Well, there's your 80%. You got the median line. Well, so if you were a buyer down here, you made money. So let's not start complaining. So maybe we get that. Then back to the, see, right? So maybe we go that way. Maybe that's 1, 2, and this becomes our 3. Then we're looking for our 4, right? Then we're looking for our 5 because we know we've got a high probability target up here. Do you see how that lays out as a potential roadmap? First thing from here. If this holds, 80% odds. But again, it doesn't mean that it goes this way. We might get there and bounce off, and then if it does that, that's a thank you very much. Because all you're going to do is play the next retracement. So if I work from this, if we get there, look where we go here. Again, it's hypothetical. But if we bounce there, because that's one of Andrew's median line trading principles is that if we're, so trading principle #1, from 3 pivots, 80% probability of getting to the median line. But hitting the median line is a very high probability of putting in a pivot. That's trading principle #2. So if we pivot there and retrace, that's a thank you to the market gods for giving you the opportunity to get long looking. Here we go again, right? So from here, so what would we have here? It's a slightly different. So not the golden corner pocket because we're not at the corner, but we're getting another high probability pivot to go towards the median line. The median line is a magnet, It becomes a magnet. And the algorithms use it because you understand why. Because it's simple. Because they can write software to work from those 3 pivots and then do, consider it this, it's return to the mean. That's all it is. That's the median. That's why it's called the median line. So it's a return to the mean. So if we get here, that's not, oh no, the roadmap has broken down. That's, okay, well maybe that's just the one wave. 1, 2. Because I got a big 3 up here. You know, again, it's not likely to go straight. You're going to have retracements along the way, if for no other reason than people that caught that are taking profit. That's a big part of what causes those retracements. People get up, and we start to roll over. Stops get hit. Short sellers enter. People, that were long here or here start. Okay, man, I'm banking it, and they clear out. Those are sell orders. That brings the market down. So then we look for the next retracement. We know long term we've got a nice big fat target up here. Do we get there? Nothing says we must, but it's certainly I want to know about that target. And so then you start thinking, okay, well, then let's put all this together. So over here, wow, I've got really, really strong interest here. This looks like a strong project here, 61 in 4 months. Huge, huge interest amongst the development community. Market cap is small, but it's potentially a grower. That market cap gets up here. We get up here. What's that going to do to that market cap? And again, if we get there, what do we have? Well, that's just the third. Right? This is where the Elliott wave starts to play. Okay, well, if we were to get there, well, how nice. Well, that's just giving me a 4th. Thanks very much. I'll take the 5th. All right, do you see it? Okay, so even if you missed all this, you still get another shot at it here. If we're going to stay in it with an impulsive movement, right? So you can look at that and say, okay, look at all the on-ramps that the market potentially offers to you. With these substantial, like stops where you're like, okay, I can expect some resistance here. Algo target, high probability, algo target, structure, pattern, price. If you've got a better way to trade the market, please send it to me. I'd like to see it. I've been doing this for 20 years. I've probably seen it, or tried it, or traded it. It doesn't mean that this is the only way to make money. I'm just telling you, this is an awfully good one to have in your repertoire. How about we say it that way? So, man, I didn't mean to get on a rant there, but I do. Okay, so let's go down here because this is what my members I know are looking at. Okay, so knowing we've got all that juice up there, all that blue sky. Well, okay, that's great, Sam. Well, how do I get in? Where are we now? Okay, so let's clear all this off, and let me see if I can get this off. All right, so having gone through all that, which sometimes I get on these rants. Okay, so what do we have here, right? Okay, that's all great, Sam. What do I have now? Well, again, it's waves within waves within waves. So I can see, okay, well, I got a 1, 2. It looks to me like I got a 3, 4. I'm struggling for a 5. Well, let's put that in a degree that would make more sense. We're not going to be at intermediate here, so let's go to subminuet. Okay, so. What's happened here? So hard right edge of the market. Okay, all the blue sky is established. We know this is a strong project. There are huge targets up above. Okay, how do I trade it? Where can I get in now? Well, we can look here. So here's our pivot, right? So here's our golden pocket. All right, there's our pivot. Here's our C. So we get a 1, 2. We get a nice little 3 wave into my 2. Up we go for the 3. That's the big move. But look what happened here, right? Oh, we overlapped the 1. So what does that mean? Well, it doesn't kill it. It just means that we have a leading diagonal. Right? So in that diagonal, so you can see it's fairly consistent here. So we get an ABC within the third, right? Which again still implies, because we didn't get this, right? So it was set up here as a potential 4th. It doesn't go up to give you the 5 there, right? That's what creates the diagonal. So we failed to get up and get the 5th here because this was a potential 4th. Do you see that? So we had a 1, 2, 3. Stutters in here, indecision. Are we going up for the 5 to get an impulse wave? No, we fall over. Diagonal, ABC. Okay, so what do we have now? So if it's a diagonal, it changes the pull. All right, so this is, again, where some Elliott wave is useful to you. So again, this is just about statistics and probabilities. Typically, right, if we look at millions and millions of leading diagonals, there tends to be a relationship in the fourth here relative to the length of the 1 through the 3. So it changes the pull. So I take the swing low here, and I go up to my 3 high. All right, so what are we looking for here? So I'm going to pull some of this off here because it just gets hard to see. Okay, so here, so from my swing low, up all the way to my 3, we come down, here's the 50. Now, in a diagonal, right, you're expecting it to go deep, because we got to overlap the 1. So the fact that we go deep between the 50 and the 618 in a diagonal, that is the sweet spot. That's your entry zone for a diagonal. Right? That's where you're looking for the diagonal. So as soon as it overlaps this, the 318 is much more typical of an impulse, not a diagonal. So as soon as we head down into here, now we're increasing the probability that we get up for a 5th. Now, it's struggling to do it. So we can see yet again, 1, 2, double top into a 3. Nothing says it must do it, but we can see the algo target sitting up here. Could that be a reasonable target for us? You know, we can look at that, and then we can take the fib alternate price projection tool, and we just like we do with the retracement, we take the length of the 1 through 3 projected from the 4. Common target would be the 618 of that entire length. Another target would be the 100. So we got three potential targets in here. What would I defer to? Algo target, because they're just working swing low to swing high. Algo target always rules. We're just trying to weave the Elliott in around it. So now what if this rolls over? What if we roll over here? Well, then potentially a failure. So then you might change that count, because then as it's set up now as a 1, 2, 3 trying to get the 5, if that fails, if we don't get that push up, then what do we have? Then we just have an ABC. And maybe just the correction is going to be more complex. So maybe we have an A, B, C. So we might go like this. So you could end up having something like this. All right, this is where A, we could have a B and then a C like this. So we'd have A, B, C into a B wave, A, B, right? So A, B, C down here for the B wave. We go up for the C. Changes things a little bit. You know, maybe we have to come back down and challenge these highs. So that's what so the point of all of this is to say, you know, you can't get locked in. Yes, all that upside potential is there, and we have a potential path to get there. But you can't just, you know, bet the ranch on it because you say, oh, I saw this guy on YouTube showed me. That's why this is always dynamic. It's always changing, and you're just adapting to what the market is doing. Is this if this stays and we get a high here and we get a push up and we get a diagonal, all we've done is like ticked off one of the things on the checklist of the potential patterns that need to take place for us to maintain the potential for those huge targets up above. A lot has to go right for us to be going towards those upper targets. This is one of the first ones. Right? Now, it could get complicated. If this fails here and we go down, it doesn't kill the targets. It just means we're taking a little detour. We may not be going there from this low. Maybe there's another low we have to work from. So again, as I will often do, you look at it and go, well, you know, is it worth screwing around with all this? You know, consider where those targets are. You know, we're just trying to get in here and find a low risk place to get in, knowing that we've got monster targets up above. So, you know, you don't have to screw around with this. You could just say, yeah, I like it, and buy it. You know, if you've got the capital to do that, and you're like, man, if I liked it here, I'm gonna like it even more down here, and I'll just keep buying it because I know that eventually, based on what I see and this information and all the enthusiasm and the development interest, well, the odds are this thing's going to go higher. Well, that has worked in 2017. That made you rich. But as a trader, that's not how I approach it. I want to be able to get in here and not risk blowing up my account because I have to keep buying it and averaging down. I'll take 3 small losers. I'd much rather have 3 small losers knowing that I've got this kind of upside. Because I just got to get it right once. Can I get in there? Little bit of risk. Look at that upside. It's the risk reward. Right? So that's why you can be, with this kind of approach, you can be wrong 7 out of 10 times and still have a very successful career as a trader. As long as you don't let one of these trades that goes against you turn into something like that. That's the rookie move. Oh, I love it. I love it. I love it. I'm keep buying. Keep buying. Because eventually one of these is not going to come back. Now you're screwed. All right, guys, I'll wrap it there.